Hello and welcome to Commodity Champions. I'm Anisha Gupta. Commodities have been on a tear since March 2020, with many having hit multi-year highs in 2021. Also, global banks and institutions have endorsed raw materials as investment plays and predict that there is more room to climb. Investment in commodity gives three benefits to an investor. It hedges against inflation, diversifies one's portfolio, and provides return potential dependent of equities. Since commodities are real assets, they tend to react to changing economic fundamentals in different ways than stocks and bonds, which are financial assets. So how can the Indian investor make use of this opportunity, and are there enough instruments to help the average investor warm up to commodities in their portfolios? Joining us now to discuss that and more is Aravind Gayan, who is fund manager at Tata AMC. Umang Papneja is CIO at IIFL Wealth Management, and Vikram Dhawan of Nippon India Mutual Fund as well joins us. Gentlemen, hi, thank you so much for your time. Globally, the commodity markets have seen fund flows. There has been a number growth that we've seen in the international markets. But Umang, this question is to you. What is the sense that you've seen in the Indian markets? If an Indian investor wants to take exposure in the commodities, what are the options really available?
Thanks, Manisha. And first, let me just put a backdrop to why there is an increased interest in commodities. So what's happening worldwide is interest rates are lower and inflation is propping up, which means that in the fixed income markets, people are earning negative real interest rates, which means that your interest rates on the bonds which you buy are lower than the inflation which is there in the market. So in such a scenario, what happens is there is always, when you see, there's always a demand for commodities which comes up. If you plot a chart on negative real interest rates versus gold, you will see that superb correlation which happens. And that's why the renewed interest on commodities is quite natural. Now, coming to the second part of your question about how can an Indian investor look at it? So there are two or three ways. Of course, you can be a broking client and you can buy futures, etc. But besides that, if you want to go into products which the asset management industry does, so there are three ways you can do this. One is, of course, on a mutual fund. So mutual funds, SEBI allowed them recently to buy commodity derivatives in hybrid schemes. Now, if you have an asset allocation product, the fund manager can go up to 30%, whereas the other hybrid schemes you can go up to 10%. So either of these, so if you probably look at asset allocation products where you get 30% commodities and you can buy equities and fixed income also in that, it gives you a perfect blend of asset allocation. Those 30% could be gold, silver, could be even metals, could be oil, could be anything, right? So it gives you a good mix of non-correlated assets in that sense. That's one. The second is PMS. So PMS, obviously the minimum is 50 lakhs, but PMS providers can also do commodity products. They can also take positions in commodities. And the third is a category 3 AIF, which can be purely for commodities if required. So these are the three ways, Manisha.
Umang, also, are there enough products available in India? Do you feel that they are accessible, and have the numbers really grown as we've seen attraction in international funds, etc.?
Yes, so Manisha, what's happening is, so the first product which was only allowed was a gold ETF. So gold ETF, of course, we've seen successes in the past, and there has been a slow ramp up of sorts in the gold ETF, and it's now quite sizable as a part of the industry. The other products which I mentioned are more recent. So most of them have been probably allowed, say somewhere around 2018 or so. So they are picking up. We've seen a couple of AMCs launching asset allocation products. And I think going ahead, these could be very large categories in themselves as far as mutual funds are concerned.
Fair point that. And yes, we have seen a lot of products come in last couple of years when it comes to commodities in the Indian markets. Vikram, this one is to you. So what would you say is available, especially from Nippon, when you look at commodities? How can institutional participation now is seen in Indian markets?
First of all, thanks for inviting me, Manisha. Hey, I think I'll just add to what Umang said. Obviously, one thing which we need to slightly change in our thought process in the investment ecosystem in India is that, first of all, each commodity is a different asset class in itself. It is very different than copper and silver or gold. More specifically, if you talk about oil, we unfortunately have a relationship of either a myopia or a fear. I mean, today we are talking about oil because, the petrol prices are pinching us and oil has gone to some uncomfortable level. So I think that, and similarly, we saw that kind of attitudes towards gold also in the investment community. Whilst the the Indians understand gold and silver probably the best in the world, and that's why we are one of the largest buyers in the world. But I think in the investment community, what we saw was a bit of a myopia that, instead of, and you have to understand that, commodity investing is all about value. The style is only value because there is no dividend or a coupon which comes in commodities, unlike equity or debt. So I think, when these commodities were correcting, we saw, in fact, instead of, doing some value buying, we saw loads of redemption happening in that. So that was a big challenge for us as an organization to change the mindset. And to a large extent, we have been able to change that along with the other partners also. And many of them are there in this panel also. That, these are all viable asset classes. First of all, you have to convince yourself that these are all viable asset classes. And as you rightly mentioned at the starting of the show, it's diversification, it's inflation hedging, it's absolute returns or whichever way you want to see it. So we built upon that in the multi-asset fund, and our multi-asset fund is not just about gold. It has got crude oil in it. It has got metals in it. Because I think some amount of commodities. It's a hygiene factor. The way you have bonds and equities in your portfolio, you also need to have certain commodities, especially gold, oil, which have a direct bearing or a correlation or a negative or positive correlation with the macros or capital market. So I think there was a lot of effort that our organization made in changing the thought process, and we did about a few hundred, if not 1,000, virtual roadshows in the past couple of years. And now I think perhaps we are seeing appetite for more products. Every subsequent call that we are doing with investors, we are getting requests for new products. So yes, it's been a good beginning. And obviously, you have to start slow and steady. So I think the slow part is off. We are on the steady mode right now. And I think we look forward to more products being approved and allowed in the market.
We look forward to that too. Aravinda, this one is to you. You also have a multi-asset opportunity fund. What kind of investment have you seen? What are the contours of this? And what kind of growth would you say that you've seen in last couple of quarters or more?
Yeah, thank you, Manisha, for the invitation. And we'll be happy to talk to you about the Tata Multi-Asset Opportunity Fund. It was the first of kind in the industry when the third asset class, along with equity and debt, was commodities derivatives. And as rightly said earlier, that in just 1.5 years that SEBI has permitted mutual funds to participate into commodities derivatives. So that itself is a new asset class, although we call it as commodities, but as Vikram also rightly mentioned, that within commodities, when we study gold, crude oil or copper, or let's say agriculture commodities, they themselves are highly diversified within each other. So our multi-asset fund is such that we have equities for sure, and then we have debt, and in the commodity section we have array of commodities. We have not been restricted ourselves to gold. Typical multi-asset strategy that we generally see is that it's all about gold, and now when we have other commodities to look at beyond gold, we have silver, we have industrial metals, we have energy products, and in fact we have a series of agriculture commodities to look at. So our multi-asset fund within the commodity space, it is a mixture of commodities, and as I mentioned to you, that it's not about just gold. Wherever you see good opportunity in any commodities, we do participate in that, and some of the commodities within the space also are highly positive and also highly negative correlated. So take an example here, gold, silver, though carry a very good positive correlations, but also they carry a very good negative correlation with the equity markets and the other markets. So when we look at industrial metals, within the industrial metals sector, we have in India 5 metals which are available to trade. But then today, if you look at them, the homogeneity is gone. So within the metals also, you have got options to select whether you want to go with a copper or lead or zinc or nickel. And good that we have agriculture commodities, which is more than 10-12 commodities are being traded with the option of physical delivery as well. So I think having array of commodities in the basket, that itself creates the fundamentals of diversification in the fund. And the moment we are naming it as multi-asset fund, so within equity, one has a choice to look at multi-cap stocks. Within debt, also one has a choice to look at various duration funds. So in commodities, it was all about gold. Now you have more commodities to look at it. So it is completely a highly diversified product. So one should look at multi-asset as a category going forward, given the current economic situation that is prevailing in the world.
Oh, well,
Yes.
point taken. Yes, it is interesting times, aren't they? And commodities as an asset class really seems to be becoming mainstream. Umang, this one is to you. What product would you advise that an investor should look at when it comes to commodities? And as you mentioned, with inflation rising, would you call it the right time to invest in commodities?
So the simplest, of course, Manisha, is mutual funds. So please have a chat with your mutual fund advisor on which asset allocation funds are there in the market. And how much is the exposure to commodities. And as I mentioned, negative real rates is a catalyst many times we've seen in the past. Of course, every time things can be different, but we've seen that when real rates are negative, commodities do quite well. So it is from a timing perspective, from an importance perspective, and even from a product standpoint perspective, I think we are in the right zone to look at asset allocation products through the mutual fund route. I would prefer that over the others.
All right. Well, yes, that's well taken in. There are products out there, and this is perhaps the right time. Commodities are in a mainstream, but there are some challenges as well. And as Vikram also mentioned earlier, that it's about steady now, and it's about more products that the industry is awaiting. And that's exactly what we'll talk about after this very short break. Welcome back. You're watching Commodity Champions, and we are discussing the investment that can be done in commodities and the various products that are available. Umang, let me start with you yet again. And what would you say are the challenges in the Indian markets? I mean, not too many people venture into commodities. Is it because it's too sophisticated? Is it because it's too fragmented, even speculative? What are the challenges that you see here?
No, so it's a new product class, I would say. Commodities obviously is not a new asset class, but at least from a product standpoint, we're seeing commodities coming up in financial products for the first time. So yes, so they are considered to be sophisticated because people only could buy futures and not many people are comfortable with it. But once you give money to a mutual fund and you know that the fund manager is taking allocation which is prescribed by SEBI regulations, which is in a limited manner, and gets you the diversification which is required. I think that's a better approach, and you know that you don't have to really go and buy that future of that particular commodity, etc. It's the mutual fund manager who's doing it for you. I think as time progresses, so I'm personally very bullish on this category of asset allocation, and I think it's going to be a very large category in itself as time progresses. So we've seen categories like, for example, the balance funds. If you see in the early 2000s, they became a very big category because they were some kind of an asset allocation product in that sense, where 65% is in equity and 35% in fixed income. So similarly, asset allocation products, in my view, over time are going to be a category to reckon with.
Well, yes, it's a sophisticated market, all right. And as Vikram was pointing out earlier, that each commodity perhaps is an asset class in its own self there. Vikram, what would you say on how should we deal with it? What is the way to get into commodities? Because there is interest out there. Do people understand it enough? Is it accessible to retail and institution participation right now?
So our philosophy is very clear. For us, descending order. First of all, which commodities are important for the Indian investors? In terms of whether we have a shortage of those commodities. I mean, for instance, 80% of our oil is imported almost all the gold, silver is imported. So there are no listed producers, genuine producers of gold, silver, or maybe nickel or whatever it is. So that is one, way of sorting out which commodities we would focus on. And secondly, it is all very theme driven. For instance, if we talk about silver, today the largest growing, segment of demand for silver is solar. So again, it can be a proxy for solar if you believe in the solar industry, a proxy for that. Similarly, if you talk about base metals, as I've also mentioned before, that it's a proxy for the electric vehicles. I mean, if we believe in the electric vehicle story, if we believe that from whatever 1% or 0.5% production of EVs, it's going to go to some 10, 15 or 20% in the next 40 years, there is not enough lithium or nickel or copper, and there'll be a pressure on aluminium also and other metals also if this story was to unfold. So it's a
Vikram,
very theme-driven thing that we follow. Because obviously we encourage investors who are in it for a longer term. I'm not saying that the base metals will take off tonight. It will take time for the EV story to manifest. Similarly, the solar story also.
So Vikram,
with regards to oil, also what you have to appreciate is.
Vikram, let me also put this question in another way. Who do you think the fund fits well into? I mean, what kind of participation are we looking at? Because, clearly, as you mentioned, the themes are playing quite well. The fundamentals are strong. We've seen commodity prices run up as well. Has the Indian investor made use of this?
So I think, first of all, there was nothing like this available. So there were no precedents. And as you can imagine, that there is inertia at all levels, not only at the AMC level. There's an inertia at the distributor and the investor level to switch to something which is new. So there was a lot of groundwork which had to be done to make people understand what are the pros and cons of diversifying into commodities. But I think if you really ask me, this fits very well across the spectrum, whether it is a retail investor who has to fend off inflation, or it is an institution which wants to participate in these themes but may not have the wherewithal or the bandwidth to take an isolated call on, let's say, a silver or a crude, or people who are averse to proprietary trading. For them, these kind of products in which it gives a exposure, but at the same time, it is not it is not a crude fund or it is not a silver fund, but it's a multi-asset fund. So I think it fits across all the spectrum. What is also good for the hybrid funds is that, today, and as the pandemic showed, that we are living in a very uncertain, indeterminate world, and the ground reality is shifting very, very fast, has been shifting very fast. So I think timing the market has become even more difficult. So if you can get the timing right, when to buy, when to hold equities, and when to hold bonds, and I mean, we had a 30-40 bips rally in a 10-year US yield in a couple of days. So that's the kind of moves that we are seeing in supposedly safe asset classes. So timing has become even a more difficult thing, to wrap your head around. So if you enjoy trading, and obviously this is not for you, but if you're looking to participate, in the broad spectrum of the asset classes available, whether you are a retail investor or an HNI or an institution, it fits very well for them.
Arvinda, I was having this conversation earlier as well, that regulators have done enough. So when it comes to increasing participation or awareness or getting people to invest into this, trade into this, perhaps now is on fund managers, industry itself, and they will have to push it. So how are you looking at the growth of it? Are you satisfied with the kind of growth that we've seen in mutual funds, especially when it comes to commodities in the last couple of quarters or years for that matter? And what is the growth that you're working with on from here?
I think I'll be very affirmative about this, very positive about it, because it's just the beginning that has started, and the steps taken by SEBI is definitely welcoming, and it's very easy to count. There are a couple of AMCs who are offering commodity-backed mutual fund schemes today. Let's say Tata Mutual Fund is doing, now Nippon is doing, maybe it's just 1 year spent, and perhaps many other are observing to look at to launch certain schemes with commodities flavor in it. So I think it's a long way to go. Of course, we are seeing challenges. One of the major challenges that I have seen in my experience is that the moment we talk about gold, silver in India to anyone per se, the acceptability is very easy because that's the Indian nature. But the moment we talk about any other metals or agriculture commodities or energy prices, there is a general thought process in the mind that it is volatile, they are volatile. How can they be part of the particular mutual fund scheme? But then in the meanwhile, I would also urge here is that experts are managing that. They understand the risk of handling various asset classes within the commodity space. So I think one needs to look at diversification, and we have been experiencing equities market, debt market for many decades now, and it's just that new asset class have been introduced under the institutional segment, and it needs to have to be given time to flag off. I think it's just the beginning, and I think the challenges, these are the initial hiccups that we are seeing today. But I think with the penetration of a couple of mutual funds and alternate investment funds, and in fact some of the PMS are also looking to have commodities backed fund. So I think it is though a very slow process at this moment. If I would say last 1 year during especially the pandemic time, the growth story has been slow, but I would be very happy to say that it's the beginning, and I think going forward to see good construction here. And as an asset allocator, as he also rightly mentioned, is that when you are looking for an asset allocator, then you have now a lot of options within the commodity space also. So I'll be very optimistic about the steps that taken. Perhaps the commodity fraternity like exchanges, regulators, and trading members, they all need to be more strong in terms of facilitating services towards the institutional participants in the market.
Oh, absolutely, yes. Commodities have clearly outperformed various other asset classes. If you think you have missed out on this or are looking for products, on the show today, we've given you the top fund managers in India who can actually provide you that opportunity to trade in case of commodities. Gentlemen, thank you so much for joining us and laying it out all for our viewers as well. With that, it's a wrap up on this edition of Commodity Champions. Thank you for watching.